Hi everyone, let's talk about Neurometrix. So it's a healthcare company that develops and markets products for the detection, diagnosis, and monitoring of peripheral nerve and also the spinal cord disorders. Earnings have grown already 63% per year over the past 5 years. Snowflake Analyze shows 6 out of the 6 on the financial health. On the risk side, highly volatile share price. This had been reaching the peak back last month actually, $38 per share. Then it bounced back to the around $10 was the support, and currently it it actually doing the parabolic side. So on the today's trading day, 56% in the return. There's also the significant insider selling over the past 3 months, and they printed a lot of shares out, so it dilutes the shareholders. Also, based on simple Wall Street, they does not have a meaningful market cap, which is 59 million. Latest share price and events, they had mostly earnings updates. Also, there was annual general meeting, shelf registration, and this is all leading to the market performance of 1 year return. If we look at the bigger frames, 479%. In bigger frame, 3 year return minus 22 and 5 year minus 91. In long-term price volatility, consider as highest. Valuation side, so basically simple Wall Street, neither the tip ranks does not have any price targets, but on the market watch there's a stock price target. Yeah, it's on average $50 per share. So there's a high potential that it could even be more pricey than we saw it last month. Also, the volumes were then at around 100 million. They decreased, but they are once again raising 54 basically today. And future growth, unfortunately, it's forecasted for the industry, the healthcare industry, 16%. Past performance, historical annual earning growth increased by 63%. So they had this kind of ups and downs. The most disaster year was back in 2016. Earnings were minus 42 million. That's a huge loss. Almost minus 400 of the profit margin. But they managed somehow to, within 3 years, actually made a positive earnings. But then they decreased once again, and currently they are not doing as well as they could, but not so bad as they did in 2016. Earnings based on last earnings updates minus 1 million, 1.1. That is meaning that the company is unprofitable currently. On the financial health side, I guess they have no debt, yes, and they do have a lot of cash, 8 million, 8.3 million of cash and no debt, and it's raising, so it's pretty good. Balance sheet looks green and they're not paying dividends. Let's skip the management. Ownership, so insiders on the both side. There's on a seller side, there's an individual, almost 300,000 US dollars sold, and on the other side there was a company that have been buying $100,000. Ownership breakdown, mostly general public holding 82%, hedge funds 10, institutions 6, insiders less than 2. Top shareholders, we see here Vanguard, no change. Renaissance Technology increased 53%. One of the, I think, chief financial officer Senior VP decreased 37%, BlackRock decreasing 17%, and yeah, mostly green, so many of the Bank of America adding 135%, Wells Fargo decreased 4%, and this is actually reported back in June. Actually, this one is August. Monday, actually. And this is all June. On the simple safe dividends, we see shares outstanding keep significantly increasing. I guess they need some of the money for the operating and investing, and for the expansion reasons. But also the total sales are volatile, so they had better years, 2017 for example. Since that it decreased, but once again comparing to the last 12 months, they managed to increase the revenue within 12%. And actually if we look at this one, so there it is, July 19th, a few days later, 600% return, 1 year return 796%, huge returns. 5-year frame, we see already different situation. And on the max side, yeah, so this is all time minus 99% down. So this is the volatility that I'm warning you all the time. And I wouldn't warn if there wouldn't be such situations on the market. So it's harmful for me to see when a lot of people lost almost all of the money that they had in pretty much one stock they invested in. So try to diversify by industry, by time, and also define your strategy. That will help a lot and minimize the risks. Investing.com, summing the stock for long-term investors as a strong buy. There's a moving average buy and technical indicators strong buy. And I also wanted to point you out, guys, there is one of the stocks, it's actually support.com, that is currently trading a lot since there's the returns 184%, jumps to 174% by today. I think it went actually by 200%, I guess it have been by in today's trading. And actually I made a 2 video of it, so this stock might go parabolic back in March 22nd, and also the second video back in actually last month, July 28th. And if we check the dates, so first video went here. Those who invested since are profiting 653%. Other one, 28th of July. So actually, if we went from the first video to second one, yeah, actually it's here 30%. And from here to another point, almost 500%. And this was actually past year 2,500%, huge returns. So this is one of the examination of one of the comments I read, not so recent, but maybe 2 months ago, that after I post a video, there could be high volatility. People are losing some of the money. For example, was $50 per share, then it went $25 per share. There's minus 50 on the screen. But there's a lot of the stocks that I research, they are making this kind of path. So they are mostly, for example, we see here minus 30, minus 40 even, I think minus 50, yeah, as you said, and minus 60 even, 65. I guess 65 was the lowest point. And this is important. I comment that if you believe in a company, try to average the stock price. If it went, for example, from we see here, $7 drops to $4 or to $3. So you brought here 22nd of March. You buy every month, for example, diversifying by time, 22nd of April, $3. So when you average the price, if you believe, of course, on in the company, if there's a good fundamentals, if it's quality, if they have quality business, if there's everything, they have low level of depth, they have a lot of cash, for example, that there's no reason to make bankruptcy or so. It's not some of the trash companies. Try to average the stock price. So 22nd of May, 24th actually, 2.56. So the stock is dropping and you are buying. This is the point. So it went already minus 64% and you're still buying. And I think within this frame, your average could be, if you brought once in a month, your average could be around maybe even $3 per share. And since the $3 per share, you could profit already 1,000, almost 500%. Of course, you could sell here, for example, in July, holding it only half of the year. Not so bad, not so bad profit, so 162%. But those who are holding longer could probably make even more returns, but this is actually not so often seeing. So actually I saw maybe less than 10 shares that are making huge returns as this one, but there is many stocks that are making this kind of returns. So be aware, if it goes down, if you believe in company, try to average the price and not selling when it's like minus 65%. Don't sell when you're on the negative side. And try to, of course, the diversification works a lot more in this kind of situation, that whole portfolio would not go minus 60%. Thanks for watching this video, subscribe to the channel, like the video, and see you in the future one.